Hi, I'm Aldalu Dennis, General Partner at Initialized Capital, and I'm so excited to announce the public launch of the Coterie. The Coterie is a wealth management platform directed for people in our communities, entrepreneurs, founders, executives, anyone who has a lot of their net worth tied up in private company stock, and allowing founders and entrepreneurs and people who work in the tech community to live their normal lives by buying houses or cars or paying for their kids' schools. And so I'm really excited that the Coterie is launching today. Please sign up on the wait list, and joining me today is Ethan, the co-founder and CEO of the Coterie, to talk a little bit more about the company. Ethan, thank you so much for being here.
Sure, thanks for having me.
Tell me a little bit about the Coterie.
Yeah, so I'm the CEO and co-founder of the Coterie. So we're a new consumer fintech company. We're building financial products for founders, for anyone who makes more money from equity or carry than they do from their salary. I started the company because I was previously CEO of a company called Aptiv, and the company grew pretty well. We did about 100 million of revenue. I turned off my salary at one point and I went to get a mortgage, and the guy says, "We can't give you a mortgage, you don't have a salary." And I said, "Well, if you look at my cash and my equity and my assets, clearly I'm not at a risk of defaulting," but they couldn't conceptualize that someone without a salary could afford a mortgage. So I realized there's a big disconnect between the way that legacy institutions think about risk and think about sort of future capital allocation, and the way that me and everyone that I know thinks about it. So we build products across investing, lending, estate planning, any financial product that can help a founder achieve peace of mind. Building a company is an extraordinary undertaking, and you have enough going on with building your company that you don't want to get distracted by your personal finances. And I think founders often neglect their own personal situation because it's so complicated. And so we're here to support and empower founders by making it really simple, really delightful, and really setting them up for the future. And so we help with diversification, we help with liquidity, we help with tax planning, and we announced recently $50 million of funding from Initialized and Andreessen Horowitz. We have over $500 million of assets under management. We started the company only 18 months ago. We've launched a pretty successful estate planning product in partnership with Pillsbury Winthrop. So we're seeing a lot of early traction, and the demand for the products is not just financial, it's also an experiential question, right? A lot of the products may be available elsewhere, but the way that you engage with those, filling out a bunch of forms, wet signatures, a lot of stuff from the 90s and 2000s hasn't changed. So we created a brand new process. Everything is much more beautiful and delightful and seamless, and that's a lot of the appeal in addition to the products themselves.
You learned a lot from your experience at Aptiv, and in terms of your own personal wealth building, What would you have done differently when you started Aptiv in terms of how you managed your most valuable asset, the company's equity?
Yeah, the biggest mistake I made was not doing any estate planning until it was way too late. So I didn't create a trust or do anything with my Aptiv equity until after the Series C, at which point the value had already appreciated significantly. There's a product called an irrevocable trust, which allows you to protect a lot of the taxes that you're going to incur as a founder. And there's also benefits around QSBS and state income taxes and other things that you can do. And to be clear, this stuff is not simple, right? It requires some thinking. It's not cheap, but it's really, really beneficial to do it. And so when I started the Coterie, one of the first things I did after incorporating the company was talk to my counsel and say, let's get our trust set up, because I know that the earlier I do it, the better. And it costs some money and it costs some time, but now it's in place. I'm married, I have 2 children, so I feel like I've taken care of my responsibility to my family, to myself. So now as the Coterie appreciates in value, I know that I'm covered. And I wish I did that much, much earlier with my Aptiv equity.
But do you think that back then, before you had a wife and children, I'm assuming, you would have cared and wanted to spend, a few $1,000s establishing all these things?
When you get married, when you have children, it sort of creates a shift in your mind where you start thinking about other people more than yourself. And so I think that catalyst does, it accelerates your desire to want to do these things. But if I was advised well when I was starting the first company, I would have realize that it actually doesn't matter because you can create a trust for a sibling or for your parents or even for a friend. You don't actually need to be married or have children. You can even create it for future unborn children. So there's a lot of opportunity to protect your taxes, to get all the benefits that I mentioned, regardless of whether you're married or have children.
And aside from the wealth management and estate planning side of things, any other valuable lessons from Aptiv that you've brought to the Coterie?
Most founders have most of their wealth in their own company's equity. And obviously you believe in it, that's why you're doing it, but there's a certain level of diversification that is smart to do, especially as we get older and start families and this and that. And so I did not do any diversification with my first company. All of my net worth was in Aptiv's equity. And I had taken out debt to start the company, and so it was like I was levered to my own company's equity. This time around, I am a little bit more responsible and a little bit smarter, thinking about the future. So I've invested in private companies, I've invested in a few funds, not significant amounts. Obviously, the bulk of my net worth is still in my own company, and that's how it should be. But I am more protected, and I think a lot about founders, we have to think about our own physical health, our mental health, and our financial health, because running a company is an all-consuming enterprise, and we trade off our own personal responsibilities because we say it's all about the company, and that's true. But in order for you to do this job well for 5 or 10 or 15 years, you have to sort of take care of your own home, so to speak. And so I think a lot about am I taking care of myself in order for me to bring my best self to the company? And so, for example, I hired an executive coach, which I didn't have. I work out a lot more than I used to.
You didn't work out at Aptiv, which is a fitness app?
I did work out a lot at Aptiv. I'm working out even more this time.
Okay.
And I'm eating better this time, and I'm sleeping more than I was. And all these things I'll take time in the morning to spend some time with my kids. These are things that make me feel better. They might appear selfish, but they're actually designed to make me more effective at my job. And financial planning, estate planning, diversification, liquidity, these things are critical to do in order to protect yourself so that you're there fully when you're running the company.
Well, thanks so much for sharing.
Thanks for having me.